everyone, and a very warm welcome to BNSN, the weekend edition. I'm Mubina Kapasi.
Hi everyone, I'm Avanne, Dubash, and it's been a pretty splendid week for the equity markets, and we've got lots lined up today on the show. First up, we will be addressing viewer queries on Reliance Communications, plus get you some short-term stock ideas.
We'll also be discussing Dr. Vallabh Patel's portfolio on the show.
Time to bring on board our guests. Avinash Gorakshekar, Head of Research at Moneylicious, joins in on the fundamentals. C. Rudramurthy, BV MD, Vachana Investments is with us on the charts. Thanks so much for joining in, gentlemen. First up, to our email query on Reliance Communications sent in to us by Arjun, an investor from Hyderabad. Well, he's bought 555 shares of Relcom purchased at a level of 133. His question is, should he hold, sell or add more with a long-term time horizon? Now, this stock has had a pretty stellar week, gaining in excess of 7%, been in the news with respect to its 4G services going live for CDMA customers, the upcoming merger with Aircel, which is expected fairly shortly, and ICRA too recently upgraded the company's loan facilities, revising the long-term outlook to stable. Let's talk about the fundamental aspects, Avinash. While a lot of this is working in favor of the company, our investor here has purchased this stock at a whopping 133 rupees. In light of the fact that it's trading close to the 50 mark, what would be your call?
I think, Avan, clearly, the buying price has been on the upper end, and my sense is, I think, if he really has a long-term view and he can wait for a 2-year horizon, then I think he should hold on and he should actually average his price, because unless he does it, I don't think, on a standalone basis, he would be able to recover his cost, that is 133. I think one thing which is very clear is the positives are already well known, and the markets are obviously rewarding the share price by a 6-7% uptick today. But what is important is over the next 2 quarters, you're going to see Reliance Jio coming in the market, and a lot of competition is expected both on the data and voice side. And there's no doubt that even Reliance Communication would obviously be witnessing significant tariff pressure. So unless the view is for 2 years, a lot of debt on the balance sheet is still yet there, and I think the company is looking at disposing it of its strategic assets. So probably the cash could be used to repay debt. So unless 18 to 24 months the horizon is not there, I don't think he should hold on. But if he has a view for 2 years, he should hold on. It's difficult to give a target price, but definitely I think things are looking good over the longer term.
Okay, that's a call coming in from Avinash. Hold on if you have a longer term time horizon of about 2 years. But Rudra, coming on Reliance Communications, why the last 1 week has been fairly good for the stock, a good 7% rise coming in, mostly on the back of course, a lot of news making. If you look at it in the last 1 month, it's just been up by only about 3%. And if you look at it 6 months, it has been quite, in fact, weak, 45% of a downtick seen in that one. So, Rudra, how does it look on the charts for Reliance Communications?
See, on charts, Reliance Communication has a very strong support at 48. Current price being closer to 50 rupees, definitely I advocate a hold on stock, because you are right at the support level, which is at 48 rupee. So definitely keeping 48 as stop loss, one can hold on to Reliance Communication. You can even look at averaging it also at current levels. However, one has to understand rupees 60 is a very stiff resistance on Reliance Communication. Only if it crosses levels of 60-61 rupees range, then it can go further upwards and test levels of 90 rupees. So what I advocate is at current levels, definitely he can add up and average his price, so that his overall weighted average price keeps coming down, and 48 should be a strict stop loss which he has to follow. And once it breaks 60-61, stock can head towards levels of 90 rupees within a time frame of about 1 to 1.5 years. So at around levels of 90 rupees, definitely I advocate an exit, and definitely much better stocks are there to give him good returns rather than sticking on with Reliance Communication.
Okay, that's the call coming in on how you should really be approaching Reliance Communications. Rudra also outlining some of the levels that you should map out. Next up, we've got a query coming in from Santhanam in Bangalore. So let's get straight to it. Our viewer here wants to know some good and fundamentally strong stocks, 2 in the large cap space, 2 mid caps or small caps at the current market levels. He's talking about a time horizon of the next 1 to 2 years. Now, remember, Mr. Santhanam, he's retired, so preferably nothing that's too risky, Avinash. What would be a sort of long-term wealth creation idea and some mid caps as well?
From the large cap space, I think housing finance is one sector which should do well, and I think here we would like, the investor to buy something like a LIC Housing Finance, a very strong loan book kind of growth, a very stable asset quality, and it's the second largest housing finance company after SDFC. So clearly has a pan-India presence. So here definitely he could compound decent returns. And the second large cap stock would be obviously be Tata Motors. I personally would believe that any weakness currently should be used as an opportunity to buy over the next 2 years. Our sense is that whatever issues relating to the Brexit would obviously get neutralized, and more importantly, the domestic market for Tata Motors is shaping up well, so they should do well on the CV front. So two large caps, LIC Housing and Tata Motors, and from the mid caps, I think stocks like Dish TV, which operates in the DTH space, it's going to be a big beneficiary of the GST bill, which is obviously going to be watched very closely in the month of July. The management has also stated very clearly that if GST goes through, they could possibly get a EBITDA margin expansion of almost 500 basis points. So business is doing robust. The logistics cost would obviously come down. The second stock would be Federal Bank, again a very niche small banking player, and has a very strong loan book and a decent asset quality. A lot of funds and institutional investors have already been riding on this stock. I would presume that if he gives in 2 years, probably Federal Bank can give him a good risk reward ratio.
Okay, those are some top ideas coming in the large cap as well as the mid cap space from Avinash. But Rudra, coming to you on the same question, what would you advise our viewer?
See, one has to understand if a stock is fundamentally strong, definitely price volume action should also confirm the fundamental strength on the stock. And when we see a long-term chart horizon, definitely those good fundamentals have to be reflected even in price. So now keeping in mind the investors' long-term view, and also he wants to pick up some stocks in large cap, then definitely I would advocate pharma as a good sector, or even he can look at FMCG. In pharma, definitely Lupin looks one of the best stocks to own, and in case of FMCG, ITC also looks very good. However, if he wants to pick up stocks from mid cap, Federal Bank is another stock which I have concurrence with my colleague there, and Federal Bank has given a clear breakout above levels of 48 to 50. Now stock is slowly consolidating at the levels of 55, 57, and a lot of accumulation is also seen in this counter. So Federal Bank will be a very good stock to own for a time frame of 1 to 2 years. And immediately I see targets of 67 rupees on Federal Bank, and he can have a tight stop loss at 55 rupees and definitely go long on Federal Bank. And I have a second mid cap pick, that is Mlm Financial, and someone who wants to do the monsoon play or the rural sector and even to do with financials, Mlm Financial looks very good on charts. Today it has given a clear breakout above levels of 345, 350, and stock is definitely looking even very positive in F&O market, where a lot of open interest built up is seen with prices moving on the upside. So Mlm Financials is a buy for all time frames. I am very positive on this stock. One can look at targets of 400 rupees initially, keeping a strict stop loss of 345. One can look at 400 as an immediate target, and if someone has a longer time frame, the stock can definitely give very good returns even above levels of 400.
Okay. On that note, we'll slip into a quick break. We've got a slew of ideas that have come your way, and I hope we answered your query. Coming up on the other side, we have Dr. Vallabh Patel's portfolio. That's what we'll be discussing.
Welcome back. You're still tuned into BNSN, the weekend edition.
Well, let's get straight to our Portfolio Advisor segment, and we've got Dr. Vallabh Patel's portfolio up for discussion today. Well, he's 69 years old and he's got a short-term view, 9 stocks all in all. So let's find out what he holds currently in his portfolio. First up, there's Asian Paints, and he's got close to 40 shares purchased at a price point of 350 rupees. Axis Bank, 30 shares bought at 260, so making a killing on both of those so far. The portfolio also has Lupin, 240 shares at 310, so he's really been a very patient investor. Moving right on then, there's Capital Goods as well, and a lot of marquee names that you can see. So let's get to L&T. There's 120 shares at 1,030 rupees. He's also got TCS, 65 shares bought at 958. Tech Mahindra, 2 features on the list, 150 shares at 254. Then there's HUL in the portfolio as well, 52 shares at 245. Sun Pharma from the Pharma pocket, 100 shares bought at a level of about 400. And finally, Tata Motors, 10 shares at 387 rupees. Doubt there'll be too many tweaks, Avinash. This is a portfolio with a lot of those marquee names in it. He's been very patient so far, and Mr. Patel is making some stellar returns. But let's talk about where he should go from here. What is the advice that you would have? So let's dissect 3 stocks at a time. Start off with the first 3 names. Asian Paints, Axis Bank and Lupin. And if it's a whole recommendation, Avinash, walk us through the kind of target prices that you'll monitor.
Yeah, I think you're right, Avan, that I think the kind of stocks he has held at kind of prices, he definitely has, invested at the right price. So Asian Paints is a hold. I would presume that if he can hold on for the next 12 to 15 months, hopefully the monsoon is good, we could see a target price of around 1100 rupees. Axis Bank also, since his margin of safety is pretty strong here, I would suggest him a hold because we believe that the banking sector would definitely recover and show a strong growth in the next couple of quarters. He could expect a target price of 675 here. As far as Lupin is concerned, a little bit of underperformance, but as far as the investor is concerned, he's making a decent profit. So I would suggest him to hold on, maybe for at least for the next 12 to 15 months. He could get a target price of close to about 1800 here. So clearly, this would be the view on these 3 stocks.
Okay, so he's already making a good amount of money on these 3 stocks, and as per Avinash, there may be potential to make more. But getting a check on the next 3 stocks in his portfolio, L&T 1030 is his buying price, TCS 958 and Tech Mahindra 254 rupees. Clearly, he's making some good money in all of these 3 stocks, and I think especially TCS, that one's really standing out, 2 times the money that he bought in at. So Avinash, what is your recommendation on what he should do with these 3 stocks?
I think Larsen and Toubro also is a hold, considering the kind of macro recovery which we all expect, in FY17. Our sense is that L&T could definitely get a target price of around 1800 to 1900 over the next, 12 to 18 months. This is definitely a stock worth holding. As far as the other 2 stocks are concerned, I mean, you mentioned about Tech Mahindra. I would suggest that Tech Mahindra is one of those companies which actually gets impacted negatively from the Brexit, and there are a lot of uncertainties, especially relating to Tech Mahindra. So here I would suggest a switch. He could look at a stock like Majesco, which trades at around 542 and is largely a mid-cap stock, operates in the US insurance market. He could get a target price of around 750 odd here. Clearly, this could be a switch. And as far as TCS is concerned, I think again from the IT space, but it's a frontline player, and our sense is that kind of margin of safety he has and the kind of longer term performance which TCS could throw, he could get a target price of around 2800 to 2900. So TCS is a hold, but Tech Mahindra, I would suggest him to switch over to Majesco.
Okay, so that's the only, trouble spot, if you will, that Avinash has spotted, but not like he was an investor here, wasn't making money, but perhaps some exposure to a mid-cap name would be advised. Finally, then, let's talk about the pharma stock, and that's Sun Pharma in his portfolio that he's got. Do you think that this would, stand out as one of the strong stocks fundamentally within the space? What's the call on HUL and Tata Motors, given the rough ride that it's been through, Avinash? Do you think that it can steer through?
Avan, as far as Sun Pharma is concerned, here I would like to caution the investor that for FY17 already the management has guided for a 10% top line, and from a large company of the size of Sun Pharma, this seems to be quite moderately low. Here I would suggest him a switch to Aurobindo Pharma, which trades around 750 now, and which if he can hold on for the next 12 to 18 months, he could get a target price of around 1000. So Sun Pharma would be a switch to Aurobindo. As far as HUL is concerned, again from the FMCG space, he should hold on here because the monsoon as well as the kind of volume growth numbers which we expect in the couple of quarters are going to be extremely strong from Hindustan Unilever, hopefully if the monsoon materializes. Here there are expectations that the management could also consider a buyback at some point of time. So here he should hold on with a slightly longer term view, about 12 to 15 months. He could get a target price of 1050. And as far as Tata Motors is concerned, as I mentioned earlier, I think over the next 12 to 15 months, we are going to see the domestic CV cycle grow quite significantly. The passenger car segment has also picked up, and more importantly, JLR business is going to stabilize. So maybe for the next couple of quarters, it could be little volatile for the European market, but otherwise all across the other markets, JLR is doing pretty well. So here would be a hold with a target price of around 540, again with a 15-month horizon.
Okay, so that's the advice coming in from Avinash. Hold on to HUL and Tata Motors, but switch Sun Pharma for Aurobindo Pharma. But let's slip in a short break. On the other side, we'll be back with some more wealth creation ideas right here on BNSN Weekend Edition. Stay tuned. Welcome back. Thanks for staying with us on BNSN, the Weekend Edition.
Well, let's focus in on the market action, and it's been very commendable for the week gone by. We've shrugged off those Brexit fears, and the markets have marched ahead to pierce 2016 highs. 83.56 is the kind of high that we witnessed during the week, and we shut shop higher with a gain of in excess of 2.5% on the frontliners. What really reflected momentum is what the broader markets did. There you have it, 5% for the mid caps, and the small caps too have been very active. Let's get in a view then, and Rudra, talk about what is going to be the trajectory for the markets now that FIIs too have resumed buying, and we have steadily been climbing higher this entire week, breaking through some important levels.
Yeah, crossing levels of 8,300 clearly suggests for us that we are in a big bull market. Now one has to understand, bull market definitely climbs all the worries, whatever you see, whether it is Brexit, whether it is Rajan's exit, which we term as Rexit, all these things are taken care by market, and we have pulled back from the lows which we saw somewhere close to 7,930 on the Brexit day. And also fundamentally, if you see, unless we see improvement in corporate earnings and also a good monsoon, the up move in market can never stand. So currently having a very good monsoon than expectation and also expecting GST to pass through, I am definitely very bullish on market. Technically also having crossed levels of 8,300, now we are headed towards levels above 8,600, which can come in a month or two. So for the series of July as well as August, I am very bullish on Nifty, looking for targets of 8,600 to 8,640, and one can have now a strict stop loss at levels closer to 8,125. which was the high which we made on the Brexit day. So unless we break levels of 8,125, definitely this market is buy on every dips. Now also to give a comment on Bank Nifty, again we have seen levels closer to 18,000 being easily conquered, and we are moving again to levels which are above levels of pre-Brexit period. So Bank Nifty is also showing lot of strength. Immediately it can see levels of 18,300 to 500 in July and August month series, and above that we can definitely see even climbing back to levels closer to 19,000. So definitely market looks very good, and it is in a bull run which is digesting all negative news.
Oh yes, that's true. We are certainly in a bull run, and we are able to digest in all the bad news rather, whether it's Rexit or Brexit. Avinash, come in on the markets, because not only the Indian markets, but globally as well, we have actually been able to scale back to those pre-Brexit levels. How are you seeing the markets at this point of time?
I think clearly, the market has given a clear thumbs up post the Brexit. I think everyone is aware that, the day the Brexit happened, the markets corrected significantly. But I think over a period of time, it realized that Indian markets would not be impacted significantly. And I think levels of 8350 to 8400 in the short term, and clearly, hopefully the earnings season and the monsoon session and how, events pan out, especially on the company performances, would be a key. But my sense is 8400 would be a key. Once the market crosses 8400, I think you're going to see a lot of FII related buying coming in. We have already seen some good flows coming in for the past few days, and I think the markets are now also happy that Brexit has happened, so a Fed rate hike is also now ruled out at least for 2016. So all said and done, I think one should buy on declines, and I think one should stick to quality names.
Okay, that's the view coming in on the markets, given the kind of move that we've seen of late. But let's talk about some wealth creation ideas and top trading calls as well. And Rudra, start off with you. On the charts, what is it that you would advise viewers to do?
See, I'm expecting definitely outperformance from real estate and infra pack. Even cement can do well, and FMCG is also a sector for a long-term investment. Now, however, picking from a mid cap, I like Man Infra a lot. This stock has seen a lot of block deals and accumulation by big HNI and also fund accumulation having happened at levels closer to 3840. Also on chart, there is a very strong base in Man Infra at levels of 38. So definitely this stock can be bought on every dips. You are very close to long-term support on the chart, and this stock can go on and test immediately levels of 52. And if someone has a longer time frame on this stock for a period of 1 to 2 years, I won't be surprised even if this stock doubles from current level, and one can have a target level closer to 80 rupees for a 1 to 2 year time frame on Man Infra. I have a second buy call on Manappuram. This stock gave a clear breakout above levels of 35 to 38, and it has no look back at all. And whether you call it as an NBFC theme or you call it as a gold move, which is just established, and we are also expecting gold loan companies to do well, because gold is definitely trading at again highs of 2016, and we have seen a steep rise in gold prices after Brexit. So I am very bullish on Manappuram as well as Muthoot Finance, but among the two, Manappuram charts looks very strong. This stock can now test levels of 82 rupees immediately, and above 82 levels even 100 can come on Manappuram. A very strong stock, a very safe stock, and compared to valuations with many other similar looking stocks or from comparatively closer sectors like NBFC, Manappuram will definitely do very well. So 82 is my immediate target, and for a longer time frame even 100 rupees can be seen on Manappuram. One can have a stop loss of 65 and definitely go long on Manappuram.
Okay, so buy calls coming in over there from Rudra. It's Man Infra as well as Manappuram. But for somebody who has a long-term perspective, Avinash, come in on that one. What would you advise some long-term investor on some wealth creation ideas?
I think looking at the kind of long-term risk reward, I think we have selected two stocks. The first is Atul Auto. We believe that Atul Auto is a very dominant player in the three-wheeler space and has got a pan-India presence, operates in more than 16 states, and has a market share of almost 18% in the goods three-wheeler segment, and in the passenger segment it's a smaller player with 5% market share. The key triggers for Atul Auto are obviously the fact that they are now testing a new petrol version which is going to be launched in the coming quarter, and in terms of numbers the company has always grown at above industry growth rates. In fact, over the last 5 years volumes have grown at a compounded average of almost 27%, and top line has grown by almost 20%. The management has said that they will be growing comfortably at 20% for the next couple of years. And in terms of earnings, we expect that this year we should see an earnings of around 27-28 rupees, and going forward, hopefully the volume growth maintaining, we could see an earnings of almost 35 rupees. In terms of ROE, return on capital employed, this company is virtually debt free. So our sense is that the investor should use an opportunity to buy the stock on every decline for a target price of roughly 600 over the next 12 to 15 months. The second stock which we like is Arwen Limited. Again, the company is making conscious efforts to move on the branding and retailing side, which is now almost 35% of their business. They aim to take it to almost 40% plus over the next 2 years. And remarkably, margins are definitely much more higher in branded and retail segment compared to the denim and woven textile segment. Our sense is that you will see a strong earnings growth trajectory in FY17. And FY18 also, the core business should do remarkably well. We could see an earnings of around 21 rupees. So all said and done, the re-rating would definitely happen over the next couple of quarters, and we would suggest buying at the current levels. Our target price over the next 12 months is around 400.
Okay, that's a call coming in for some wealth creation ideas from a slightly longer term view. On that note, gentlemen, we'd like to thank you for taking time out and joining in. Rudra as well as Avinash, it's been a pleasure having you with us on this leg of Buy Now, Sell Now weekend. And with that, from everyone that put the show together, thanks so much for watching.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.